All right, today we are pulling back the curtain on a tool that honestly can make a huge difference in your trading. It's called the Volume Weighted Average Price, or VWAP for short, and it's all about finding a stock's true center of gravity for the day.
So, think about it for a second. When you look at a plain price chart, it tells you where a stock has been, right? But it doesn't really tell you why. Was that huge green candle driven by a bunch of tiny retail trades, or was it one massive institutional buy? Without knowing that, you're basically navigating with only half a map.
So what exactly is this VWAP line? Well, it calculates the average price of a stock all day long. But here's the secret sauce. It gives way more importance to the price levels where the most shares were traded. What that really means is it's showing you the market's real-time consensus on what a fair price is, right now.
And this is what makes VWAP totally different from, say, a simple moving average. An SMA is just looking in the rearview mirror, averaging out past prices. VWAP is all about the here and now. It tells you where the real money, the big institutional money, is flowing today. See, those big funds use it to get their massive orders filled without causing a huge price spike. They want to buy below VWAP and sell above it. And that's exactly why it's such a go-to tool for day traders who want to swim with the sharks, not against them.
This is probably the best way to think about it. The VWAP is the market center of gravity for that day. Prices can definitely fly away from it, sure, but they always feel that pull, that tendency to come back to this line. It's the equilibrium point for the session.
Okay, so we know what it is, but how do we actually use it? That's what we're jumping into next. Because it's not just about where the line is on the chart, it's all about how the price reacts when it gets near that line. This is where things get really interesting. The basic rules here are, beautifully simple. If the price is trading consistently above the VWAP, that tells you the buyers are in charge. The sentiment for the day is bullish. If it's trading below the VWAP, sellers have the upper hand. And if the price is just kind of hugging that line, it means the market's in agreement. The price is fair, for now. Theory is great and all, but let's put it into practice. We're going to walk through a typical trading day, moment by moment, just to see how these signals play out when things are moving fast. We can really break the day down into 3 key phases. First, you've got that initial burst of momentum right after the open. Then comes the crucial midday test of that new trend. And finally, you get the confirmation that tells you if this trend is the real deal. So the opening bell rings and it's chaos, right? Imagine the price just rockets up, breaking cleanly above the VWAP. This is our first major clue of the day. It's a pretty strong signal that buyers are stepping in and they're willing to pay up. But you know how it is? Trends almost never move in a straight line. After that initial explosion higher, the price starts to cool off. It drifts down, heading right back toward our center of gravity, the VWAP line. This, right here, is the moment of truth.
Yeah, everything really comes down to this moment. Was that morning surge for real, or was it just a head fake? The VWAP is now acting as a dynamic support level, and the big question is, are those buyers from the morning going to show up again and defend this price?
And boom, there it is, a textbook entry signal. The price comes down, taps the VWAP, finds support, and bounces hard. That bounce is our confirmation. It's like a big green light, telling us the institutional buyers are defending that level, and the uptrend is very likely to continue.
So we just saw a perfect textbook example of a VWAP bounce. But let's be real, it's not always that clean. So what do you do then? This is where we need to zoom out and talk about building a more robust strategy to handle those messy, imperfect setups. Look, VWAP is incredibly powerful, but it is not a crystal ball. That's why the sharpest traders always look for confirmation. You have to think of it like a detective building a case. You need more than one piece of evidence. So if you pair a VWAP bounce with another indicator, like the RSI, you can filter out a lot of the noise and build a much stronger case for taking the trade. You can even create a simple little checklist like this one. Think of it as your pre-flight check before you hit buy. Just run through these questions. Is the price actually bouncing off VWAP support? Is the VWAP line itself sloping upwards, showing momentum? And is another indicator like the RSI giving you the thumbs up? If you can check yes to all 3, you've probably got a pretty high probability setup in front of you. So let's just quickly summarize the tool itself. Its biggest benefits are that it acts as dynamic support and resistance, and it really shows you the true impact of volume on price. But, and this is super important, you have to remember its main limitation. It resets every single morning. This is an intraday tool. Now, a little pro tip, you can apply it to daily charts sometimes to get a feel for longer-term value areas, but its primary job is for day trading.
Whew, we have covered a lot of ground. So let's boil it all down to the 3 golden rules of trading with VWAP. If you take nothing else away from this, just lock these 3 things in your brain.
All right, 3 crucial takeaways. Let's make sure these stick.
First, and this is the most important concept, VWAP is your guide to the day's fair value. It's not just another line averaging out the price. It's the price level that the biggest players on the field are watching.
Number 2, those bounces off the VWAP line or rejections from it are incredibly powerful signals for getting in or out of a trade. You have to watch how price behaves around this line. It's telling you a story.
And finally, please, never let one indicator be the only reason you enter a trade. Use VWAP as your main compass, but always look for other clues to confirm which way you're headed. That is how you start to stack the odds in your favor. So, the next time you open up a chart, don't just stare at the price candles. Throw the VWAP on there and ask yourself, who's in control today, the buyers or the sellers? And where is the market's real center of gravity? Answering that one question might just give you the edge you've been looking for.